interest rates, money supply, and key economic indicators have been changed drastically given the volatile economic conditions. Correspondingly, we will be discussing on some of the key monetary sector indicators as of third week of July 2022. Treasury bill yields in the primary market have been increased compared to the previous week across all the three tenors, namely 3 months treasury bills rate has been increased up to 32%. For 1 year T-bills, rate has been increased up to 29%. For treasury bonds, weighted average yield for shorter tenors, it was somewhere around 28.18, whereas 7 years treasury bonds have been recorded weighted average yield of 26.51. Now we can inquire into government securities secondary market trade summary as of 19th July 2022. Total turnover was somewhere around 3.27 billion LKR as of 19th July. Correspondingly, number of trades have been recorded as 21. Across all these indicators, we can see an improvement compared to the previous day. However, these transactions are given for over 50 million transactions, which were reported through Bloomberg. This demonstrates yield curve and trade volumes. For 1 month and up to 3 months, approximately the volume have been increasing. Correspondingly, closing yields and weighted average yields are also been increasing across these short tenors. Thereafter, both the yield curve and trade volumes have been deteriorating or declining up to 5.5 years. Again, we can see an improvement in trade volumes and yield curve with higher yields from 5.5 years to 7 years. This indicates rates for licensed commercial banks. Savings deposit rate have been around maximum of 7% per annum. 1 year FD rates were of maximum around 24%. Again, we can see new FD rates were above 17%. And in comparison to the previous month, there's an increase of around 1.5%. On the other hand, when we consider new lending rates, there's an increase for new lending rates as well. As of 15th July, we can see those rates have been increased up to 20%. This indicates rates for National Savings Bank. For savings deposits, they have offered around 3.5%, whereas 1 year FD rates were 13.5 as of May. Compared to the previous month, there's a decline of 1 year FD rates of National Savings Bank. This denotes credit to government, public corporations, and private sector. Net credit to government as of May, it was totaling up to 6.5 billion LKR. To be precise, it is 6.5 trillion LKR. Credit to public corporations were totaling into 1.75 trillion LKR, whereas credit to the private sector reported as 7.75 trillion LKR. This manifests money supply, both the narrow money supply as well as broad money supply. We can see that narrow money supply has been reduced compared to the previous month. Same could be seen for broad money supply as well. Broad money supply consists of public deposits, current deposits, and savings deposits with licensed commercial banks. This exhibits overnight or money market activity and repo transactions. Weighted average rate for cold money market was somewhere around 15.5. However, for repo market, throughout the period of 11th July to 15th July, weighted average rate has been recorded as 15.5. This displays central bank treasury bills and bonds holdings. Face value during the period of 11th July to 15th July have been increased up to 2.26 trillion LKR. This shows treasury bill rates have been increased compared to the previous week. And now the treasury bill rates are ranging from 23% to 25% across all these tenors with slight differences. Whereas treasury bond yields could be seen as an increase for shorter tenors such as 2 years to 3 years. However, from around 15 years to 20 plus years, there's a steeper decline of treasury bond yields. References for today's presentation are from central bank statistical updates, P+DD+SA, government security trade summary, and weekly economic indicators. With that, we will be concluding. And for more of these kind of videos, kindly Google Gayan Nayanajith. Thanks